Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again at the gold market, and you can see that the gold market shows quite much easier reaction on the recent ADP report than the euro currency. So despite that, maybe the downward action is taking a pause, but we did not see any or even minor pullback on the intraday charts. So it's just my marking is just hanging upon the target, which we think that should be completed. But still, we have the payrolls report ahead. At the same time, you probably understand that whatever report we get, if we will even get the negative numbers, and that will be big suggestion that Fed will start cutting rate. The problem right now is not in the rates and what the Fed will be decision, but as I explained in today's video on euro currency, the major problem right now in the amount of the United States debt that is flowing on the market. Just the buyers, the rest of the buyers that we actually stand on the market currently, this is mostly the neighbor of the United States, Canada, European Union, and domestic investors who could absorb this debt because China is selling. Japan right now is also selling just because they need dollars to support own currency, and Saudi Arabia is also decreasing the amount of the investments in United States treasuries, and United States Treasury itself is actually issuing the debt with the unprecedented levels, and all the stuff is just flowing on the market. With this kind of the supply, so these investors just can't absorb all of it, and rate starts rising. And from that standpoint, what we have numbers and what this will be some impact on anticipation of the Fed policy, all this stuff is actually the secondary one, so it doesn't make actually some decisive moment. So that's what's really currently is driving the markets, not only in the gold but all others. And from that standpoint of view, whatever we will get on the payrolls report, as just that we will get anyway the touching of the 18 level. So if even we get the weak payrolls, market will show the bounce, but it will be very short-term reaction, and later we will see the further drop and just completion of this area. So that's what I'm thinking. On the lower time frame, on the 4 time frame chart, let's take a look. Yesterday we said that we have no signs of the double repo itself, but now we consider we have the first close above. So ADP, as you know, was weaker, and investors right now start thinking about that maybe in payrolls also might be weaker. So this double repo, if even it will be formed, it could put some background for a possible bounce, but this will be very short term. So it will not be the pattern that will break the overall tendency. And here with the targets of the double repo, we could consider 2 different levels. First level might be somewhere around 1845, somewhere this, or maybe conference 1850. If we're speaking about the minor thrust from this top to bottom, it's also might be treated as a thrust for this double repo. Other words, if we will consider this thrust as a whole, I would here take a bit more conservative point, so I haven't taken this one, but it's the point where the thrust directly started. So from that standpoint, we could consider the target around 1875. So it will be somewhere in this area. So 2 different targets might be used because as this thrust is suitable, as this thrust is also suitable for this double repo pattern. Mostly it will depend probably on the numbers that we will get. If it will be too weak, this might be action might be a bit stronger. So let's keep watching for this potential pattern, because overall situation hasn't changed, as we call you to not take any more or less long-term positions, at least on the daily chart, because currently is not good points for taking any positions. The same we could repeat right here, but if you trade on the lower time frames, and we will get the double repo confirmed, if you would like to take the risk of the payrolls report and you're ready to bet on it, So in this case, you probably could try and take the risk because, well, in general, stop order will be very close. You will not get big really loss if a double repo will fail. This is mostly just the betting, just the trading of the payrolls report. It's nothing more. And for those of you who would like to, and this is for those of you who would like to take the risk, maybe some kind of the, I would call it some kind of the gambling, maybe a bet on a possible action, because reward also will be probably significant. So if you will be right and the market will jump, well, 30, even $40 per contract, this is significant action. On the hourly chart, currently, I do not see something really interesting. The only thing that we could keep in mind that here, of course, we can't speak about any butterflies and about double repos as we discussed yesterday, because it's too choppy action. Market is turning to the sideways. But technically, this is more bearish sign rather than bullish, because market stands just above the major target, which is right below. And here is the signs of the dynamic pressure, bearish dynamic pressure. So market stands flat while trend is moving higher. So this combination, usually together with the daily target, has the bearish sentiment. So it's mostly bearish. That's why I'm a bit skeptical concerning the double repo and well, making a participation in this, because this is purely gambling. This is only, you would like to bet on the payrolls, you just make the bet and it will be just pain or gain situation. That's all as usual. So from that standpoint of view, you can see that you have few options to act or not to act. So you could choose what you like more. The conservative traders probably, as I said, it would be, well, wise decision to wait for 18 even target and level. See on response on the market and make the decision whether you would like to take the position or not, what the position you will take. If you'd like to make the bets on double repo, it's okay. So wait when this will be confirmed. Probably it should happen somewhere in the morning tomorrow, because we have to close above, we need to close below and then close above again to get the confirmation. And if you would like to take this short-term bearish trade, you will have to wait for failure of the double repo. If we'll get the failure together with the setup here, it will be great confirmation that market will drop. It's approximately $20 per contract reward, as our target stands around 18 even. So that's the also pattern to consider. That's in fact all that we have currently on the gold market. So choose what you most suitable to your personality, and let's see what will happen tomorrow when the data will be released.